It is 9:50 a.m. Pacific Standard Time. It is the 14th day of November 2025, and this is episode 1211 of BitcoinAnd. We're gonna dispense with all the pleasantries. There's no introduction. You're here for the news you can use, and there's no reason not to get right down to brass taxes or brass deposit tokens. Yay! I told you this is shaping up to be a thing. Like, you know, we kind of really didn't see stable coins growing to where they actually are today when Tether first started doing it. It was a novelty. It was simply a coin that people, you know, degen gamblers could use on exchanges to lose their life savings most of the time. Some people actually made a shit ton of money doing that, but 98% of people probably lost their children's college funds or their marriages or God only knows what else, because degen gambling is not good. But now we have this thing called deposit tokens, and I've told you about them a couple of times, and it looks like they're coming up, and I think we should probably keep an eye on that space, not because you want to invest in them, just so you know what the hell they are and how the hell it might impact Bitcoin, the economy, and you. And this one is written by Adrian Zmunsky from Cointelegraph. Alibaba weighs deposit token as China clamps down on stable coins. Okay, so there's always a pressure release valve, people. Always. You try to close a window and a door opens. I swear to God. And it's like nobody seems... We've been modern humans for millennia at this point, and we still just don't freaking get it. But the cross-border e-commerce arm of Chinese tech behemoth Alibaba is working on a deposit token amid mainland China's crackdown on stablecoins, according to CNBC. Cow Ghee, Alibaba's president, told CNBC in a Friday report that the tech giant plans to use stablecoin-like technology to streamline overseas transactions. The model under consideration is a deposit token, which is a blockchain-based instrument that represents a direct claim on a commercial bank deposit and is treated as a regulated liability of the issuing bank. Traditional stablecoins, which these tokens closely resemble, are issued by private entities and backed by assets to maintain their value. The report follows JP Morgan Chase reportedly rolling out its deposit token to institutional clients earlier this week, pausing to say, and I brought you that news, so you should be well aware of that. The news also follows reports that Chinese technology giants, including Ant Group and JD.com, suspended plans to issue stablecoins in Hong Kong after regulators in Beijing expressed, shall we say, displeasure with the plans. It almost sounds like ancient Japan, where you had to go apologize to the emperor. And if you know what that entailed, then you know where I'm coming from. Anyway, the report was just the latest of many suggesting that mainland Chinese authorities appear dead set on preventing a stablecoin industry from arising in the country. In July, both Ant Group and JD expressed interest in participating in Hong Kong's pilot stablecoin program or launching tokenized financial products such as digital bonds. Similarly, HSBC and the world's largest bank by total assets, the Industrial and Commercial Bank of China, were reported to share these Hong Kong stablecoin ambitions in early September. But later that September, a now removed report by Chinese financial outlet Caixin, or Caixin is probably how it's more pronounced, claimed that Chinese firms operating in Hong Kong may be forced to withdraw from cryptocurrencies and cryptocurrency-related activities. According to the report, policymakers would also impose restrictions on mainland companies' investments in crypto and cryptocurrency exchanges. In early August, Chinese authorities reportedly instructed local firms to cease publishing research and holding seminars related to stablecoins, citing concerns that stablecoins could be exploited as a tool for fraudulent activities. Yeah, like sucking power out of the Communist Chinese Party, but whatever. Still, China is not entirely devoid of stablecoin ties. In late July, Chinese blockchain Conflux announced a third version of its public network and introduced a new stablecoin backed by offshore Chinese yuan. Still, the stablecoin aims to serve offshore Chinese entities and countries involved in China's Belt and Road Initiative, not the mainland. In late September, a regulated stablecoin tied to the international version of the Chinese yuan launched. Still, this product was also intended for foreign exchange markets and was launched at the Belt and Road Summit in Hong Kong, signaling a similar target market. A recent analysis suggested that we should not expect Chinese stablecoins to be allowed to circulate in mainland China. Joshua Chu, co-chair of the Hong Kong Web3 Association, said, quote, China is unlikely to issue stablecoins onshore. That's the end of the article, and that's going to be the end of China. Or at least China as we know it. They're just not going to be, I mean, sure, they can say, yeah, no stablecoins allowed in China. And it will work. And they will not have stablecoins in China, and what will happen? And again, this isn't me saying go out and buy Tether. I'm actually not telling anybody to go buy stablecoins. I mean, do you need Tether to do something? Then okay, I guess, but I mean, it's not an investment vehicle. You're just literally holding dollars, right? Because it's backed by United States debt, and Circle is too. But we just print more money, and by doing so, we're printing more debt instruments, and Tether buys those debt instruments and then produce more Tether, which does it's a complete and direct coupling of the inflation of the US dollar to the inflation of Tether. You're not escaping inflation with a stable coin. That is not a stable coin's purpose. And anybody who tells you differently either doesn't know what the hell they're talking about or just straight up lying to you because they want, they have their own stable coin and they want you to buy it so they can rug pull your ass. That is not what's happening. So when I talk about stable coins, please do not confuse me with somebody who's pushing a shit coin. These things are not going to go away. So we really need to understand their function if they're going to live alongside all of us in this new and wonderful world that we call, I don't know, rug pull central and whatever. My point is, China can do whatever the hell China does or wants to do. But if they think that they're not going to be impacted by the rest of the world's adoption of stablecoin for digital online money-like transactions, then they're fooling themselves. They are absolutely freaking fooling themselves, and they're going to be caught with their britches down around their ankles, and God only knows what happens after that, and I don't want to think about it. I want to move on. I really do, because MicroStrategy, Saylor has made an announcement considering that we're now officially in a bear market. We've got a 20% pullback from all-time highs. Will it last? I don't know. That's not my job. I'm just saying everybody's freaking out again. It's not like we haven't been here many times. And really, just take several deep breaths if you're freaking out. Michael Saylor says that Strategy is still aggressively accumulating Bitcoin and that there's, quote, no truth to the rumor. And I'm hoping that Helene Braun from CoinDesk will tell us what that rumor is. Ignore the noise, says Strategy Executive Chairman Michael Saylor. With Bitcoin and Strategy stock continuing their steep slides, Saylor, in a Friday morning CNBC appearance, said his company remains committed to its BTC accumulation strategy. Quote, we are buying Bitcoin. We'll report our next buys on Monday morning, Saylor said, adding that the company is accelerating its purchases as he hinted that recent activity on the firm's wallets will show aggressive accumulation. That remark comes after online speculation earlier on Friday suggesting Strategy had been selling Bitcoin as Bitcoin and MicroStrategy or Strategy both tumbled. The rumors stemmed from an on-chain data showing BTC moving out of the company-controlled wallets. Shortly following the CNBC appearance, Saylor took to X saying, quote, "There is no truth to this rumor." As for the plunge in Bitcoin and what's next, Saylor, per usual, advised frightened investor. Hold on. I screwed that up. As for the plunge in Bitcoin and what's next, Saylor, as per usual, advised frightened investors to zoom out, noting Bitcoin was stuck in a range of 55,000 to 65,000 only a bit more than 1 year ago. Even after the recent plunge, Bitcoin at $95,000 today is still showing a pretty good return. Quote, "We've put in a pretty strong base of support around here," said Saylor, who added he's comfortable BTC could rally from these levels. Strategy, however, is lower by 4% early Friday, and it has now hit below the $200 per share number, now down nearly 35% year to date, and Bitcoin is off its worst levels, but still 5.8% down over the past 24 hours at 96,200 for investors. The rumors weren't far-fetched. Strategy now holds more than 641,000 BTC, still worth $22.5 billion, while the company's market cap has fallen below that value. Now, the gap has pushed Strategy's market to net value, or MNAV, below 1, a metric that suggests the stock may be undervalued. In that light, selling some Bitcoin to stabilize the company might seem rational. And they leave it that way, which I put shame on you, CoinDesk, for leaving the last sentence in a fearful environment, one of fear. See, I like to pause and make commentary on the actual news stories that I read and the structure in which they're written. Saylor said, okay, and this isn't secondhand. He said this on CNBC in an interview. It's recorded. Does it mean he's not lying? I don't know. But chances are really good that it's harder for somebody to lie, in Saylor's position rather, to actually bold-faced lie on TV than if he were to write an X post. Does that mean that it doesn't happen? Of course it happens. Have you seen politicians? Are their lips moving on TV? Well, then they're lying to you. That's politicians. And I'm not saying that it doesn't happen with business people. They lie too. Saylor might be lying through his teeth. I'm just saying that it's less likely than somebody saying, I heard Saylor say, or I saw a note written, or blah, 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 blah. So according to Saylor, they're not selling, that they are aggressively buying Bitcoin, and that number will appear on Monday, and we'll find out on Monday what the hell's going on. But the last sentence here, in that light, selling some Bitcoin to stabilize the company might seem rational. And that's the end of the article. In my opinion, that's a little bit unethical. And I think it's a little bit more of an eye-catching thing, maybe to grope people into reading more of CoinDesk stories. I don't know, but I find it kind of reprehensible behavior. I don't think that journalists should be acting in such a way. I'm just saying, okay? Now, on to Decrypt, where community bankers ask the OCC, the Office of the Comptroller of the Currency, to block Sony's crypto bank ambitions. Okay, so Vismaya V is writing this one. The Independent Community Bankers of America, a national trade association representing small banks in the United States, has asked regulators to block Sony Bank's bid for a national trust charter to issue stablecoins. In a letter sent last week to the Office of the Comptroller of the Currency, the group warned the Japanese financial giant is exploiting regulatory loopholes to bypass traditional banking oversight. The ICBA called Sony Bank's application for its proposed subsidiary, called Connectia Trust, an impermissible reinterpretation of federal law that could foreseeably lead to consumer confusion and consumer harm in the event of insolvency. Pausing to say, what does that sound like? Oh my God, won't somebody think of the children? It's the same argument. Oh my God, won't somebody protect the consumer? I call bullshit. They're scared. That's what's going on. Sony Bank in October to establish Connectia, which would issue dollar peg stablecoins and maintain reserve assets, as well as provide digital asset custody services. Okay, well, the application joins a growing list that includes Coinbase, Crypto.com, Circle, Ripple Bridge, which is Stripe's stablecoin arm, and Paxos. All of them are seeking federal charters as the stablecoin market surges past $311 billion following the passage of the Genius Act in July. The ICBA says Connectia stablecoin shares many features with bank deposits, electronic transfers, point of sale spending, and one-to-one dollar redemption, yet would avoid federal deposit insurance and Community Reinvestment Act requirements that apply to traditional banks. Quote, this approach appears designed by Sony Bank to receive the benefits of a United States bank charter without becoming subject to the full scope of United States bank regulations, Mickey Marshall, the ICBA's vice president and regulatory counsel, wrote. The letter questions whether Connectia qualifies for Bank Holding Company Act exemptions limited to institutions that operate solely in a trust or a fiduciary capacity, noting that trust banks lose that status if they allow deposits withdrawable by check or similar means for payment to any other third party. Connectia's plan to engage in the business of banking and activities incidental to the business of banking permissible for a national bank appears to lay the groundwork for issuing debit cards, and that would violate statutory restrictions, the association noted. The group also questioned Sony Group's corporation's roughly 20% stake in Sony Financial Group, Connectia's parent, saying that it warrants further investigation of whether a controlling influence exists that would trigger bank holding company regulation. The ICBA also cautioned that the OCC hasn't resolved an uninsured national bank since 1933 and lacks the expertise to manage a complex crypto collapse, warning that a single failure in key reassembly or system migration could result in permanent loss of access to billions in customer assets. God, they are really playing the fear card on that one. The opposition comes amid similar objections the group filed against Coinbase's trust charter application earlier this month, prompting Coinbase Chief Legal Officer Paul Grewal to accuse lobbyists of trying to dig regulatory moats rather than protect consumers. Caden Stadelman, Chief Technology Officer at Komodo Platform, told Decrypt the banking lobbyist concerns over Connectia are, quote, overstated and driven by big bank interests. The risks to consumers of stablecoins are being exaggerated in the name of protectionism by big banks of their dominance in Western finance. Stablecoins decentralize money and helps decrease reliance on incumbent banks, end quote. Regulators should foster innovation while enforcing sensible rules like the Genius Act, he said, arguing that stablecoins serve unbanked populations and can minimize bank-run risks through on-chain transparency. Do not trust stablecoins, and do not also, by the way, trust the banks that don't want stablecoins. This, honestly, I hope they fight themselves in the Coliseum, on the Coliseum floor to the death while we cheer on in our bread and circus over here, right? As long as they pull the steam out of each other, then that means they're worried about each other and they're not worried about Bitcoin. Again, and I've said this a lot, and I used to talk about it a lot more, this is the kind of shit that acts as what's called ablative armor to Bitcoin. As long as they're wasting their ordnance, shelling each other, Bitcoin is relatively kind of left alone. So just be aware, right? This shit's going on. Now, in that story, the guy makes a couple of points. From a regulatory standpoint, if Sony is transgressing those regulations, then the ICBA or whatever it's called has a right to call foul, and that's what they're doing. But I also tend to agree with the other guy saying, well, some of these fears are overblown. It doesn't really matter because this is an act of fear. They know what's coming. They can't stop it. And now they're probably having a moment of grief in the banking industry that they spent so long laughing at Bitcoin and Bitcoiners that they didn't spend a single minute researching the ecosystem. They were like, they would just hide behind the apron of Jamie Dimon, who is basically one of the biggest guys that you can stand behind, while he's saying Bitcoin sucks and it's rat poison and it needs to be stopped. And they were like, yeah, mommy. Yeah, you tell him, mommy. And instead of, by doing that, what they weren't doing was getting out from behind the apron and looking into this shit themselves so that they could have repositioned themselves, or at least been in a position to reposition themselves rather quickly than doing everything they can. Now they have to waste all their money and all their energy and all their time trying to stall stable coins while they get their own ready. And they should have been doing that shit 7 years ago. It's their fault. I am not shedding one bloody tear. But what I am going to do is later on today, I'm going to cook a steak, and I'm going to start it with GreatGhee at GreatGhee.com. Ghee, that's Ghee. What the hell is ghee from GreatGhee.com? Well, it's clarified butter. And it's made by simmering butter to remove the water, all the milk solids, and any other impurities, leaving behind a golden lactose-free oil with a nutty flavor and a very high smoking temperature. Unlike regular butter, ghee is shelf stable. That means it doesn't need refrigeration. Although I wouldn't open a can of this and then keep it on the counter for like 9 months. That's just dumb, right? Plus, this stuff is so delicious on everything that you cook. Like if you're going to cook, unless you need the milk solids, like if you're going to make cookies, you probably want the milk solids in there. But if you're going to cook a steak on a flat iron grill or something like that, dude, you cannot go wrong with just a little bit of ghee on that steak as the oil base. It's absolutely fabulous. Goes on everything. You just spread it on toast. It's when they say it's an oil, at room temperature, it's actually a solid, but it melts very quickly and it has a very high smoking temperature. It's very stable. I love this stuff. Go to GreatGhee.com. That's GreatGhee, GHEE.com. Get yourself a big old jar of ghee and tell them that BitcoinAnd sent you by using the coupon code BitcoinAnd. That lets GreatGhee know that I made a sale for them here at the Circle P. It's open for business. It's where I bring plebs with goods and services like you to plebs just like you who want to buy those goods and services, but you're going to buy it in Bitcoin, because if you're not selling it in Bitcoin, you ain't in the Circle P. GreatGhee.com. Go get you some right now. CFO has been convicted for losing $35 million of company money in his crypto side hustle. Yeah, probably not a good idea. Sander Lutz from decrypt.co. Lord have mercy. A Washington man was convicted in a federal jury trial this week for taking tens of millions of dollars from the company that he worked for and losing nearly all of it in a botched crypto play. Again, boys and girls, ladies and gentlemen, Damen und Herren, don't do this. This is going to get you in trouble. Don't shitcoin. Don't buy time tops and bottoms. This is how you get destroyed. And like this poor dumbass gets so destroyed, you end up in jail. Nevin Shetty, who's only 41 years old, was found guilty on Thursday on four counts of wire fraud for taking and misusing $35 million worth of funds from a private software company that he worked for as their chief financial officer. He's like C-suite, dude, and he stole from his own company. Though Shetty himself drafted a conservative investment policy for the startup, which called for its money to be invested only in FDIC-insured treasury and bank accounts, the executive soon secretly moved tens of millions of dollars of company funds to a crypto platform that he himself had developed. He rolled his own and took the company he worked for's money and put it into his rolled exchange or platform. Oh my God, this gets worse and worse and worse. Shetty opted to transfer the funds to his crypto business weeks after receiving news that he would soon be let go due to performance concerns, according to federal prosecutors. Through his crypto platform called Hightower Treasury, Shetty invested the company's funds in a variety of high-yield decentralized finance lending protocols. The plan worked well, at least initially. During the very first weeks of the scheme in April of 2022, Shetty generated over $133,000 of profits for himself and his business partner, who I guess has yet to be named. But then crypto winter came. In early May 2022, the algorithmic stablecoin Terra collapsed, instantly wiping out $60 billion in value and dragging the rest of the crypto market down with it. In the days that followed, Shetty's $35 million worth of crypto investments plunged towards worthlessness. By May 13th of 2022, they had fallen to a value of near zero. Shortly after the funds were wiped out, Shetty told two of his colleagues at the software company what had happened. He was promptly fired. A Seattle jury convicted Shetty on 4 counts of wire fraud. After a mere 10 hours of deliberation, the executive will be sentenced in February. He faces up to 20 years in prison. He'll be out, shorter than that for good behavior. But holy crap. So you didn't even have the good sense to buy Bitcoin. Well, it wouldn't have mattered. He would have lost it. He would have lost his ass on that too, because everything went down. Don't do this kind of shit. And I'm even talking about just scale it back. You're not working for a company. You're not working with $35 million. You're working with like a little bit of your paycheck or something like that, or your own side hustle, money. Don't buy shit in DeFi lending protocols and Sushi Swap and whatever. Come on, man. We've been through this before. You buy Bitcoin, you hold Bitcoin. Let's run the numbers. Woohoo, CNBC, futures and commodities. Let's see what kind of carnage is going on. Brent North Sea is up by 2.25 points to $64.04 a barrel. West Texas Intermediate crude is up 2.5%, finally back up above 60 to $60.16. And the hedge that is natural gas is down 2.5%, just like clockwork. $4.52 per thousand cubic feet. Gasoline is up 2.7 to just over $2 a gallon, and Merbon crude is up 1.75% to $66.17. Shiny metal rocks getting their clocks cleaned. Palladium down 3.5. Gold down 2.5. Still above 4,000, but it's at 4,093. Platinum getting plunged 3%. Silver over the cliff 4.25%. Copper down 1%. Almost all ag is in the red except for sugar, which is up 2.84%. Biggest loser today looking to be chocolate, down 3.68%. Live cattle, however, 0.15% to the upside. Lean hogs up 0.86. No McRib for you. Feeder cattle up 0.5. The S&P is in the green by 0.14%. NASDAQ up over 0.25. The Dow is down just under 0.5 point. And the S&P Mini is crawling sideways slightly in the red and $95,980. It doesn't sound as much fun to say any numbers below 100,000, but that's where we are. And I'm not going to cry about it. Why? Because I'm kind of numb. I've seen it all before. Like when we got up to 20,000 in 2017 and it plunged, I felt terrible. And then it got up to even higher than that, and then it plunged. And it was back at like around 18,000 or something like that. And I felt terrible. And then it rose again. And then it plunged, and this time it was between 40 and 60,000, and I felt terrible. I'm done feeling terrible. I'm just done. I can't tell if it's because I'm numb or if I just don't have any more energy for it. But here's what I advise. If you're new, lean on the old timers. We've seen it so many times before. We've developed a great amount of patience, and I got to tell you, patience is a virtue for a reason. You know, people always say that. Oh, well, just remember, patience is a virtue. Yeah, really, why? Well, there's a reason for that. To remain calm. If you can quiet your nervous system and be calm and realize that you just got a shocking amount of news. It could be a job loss. It could be, I don't know, the price of Bitcoin. You didn't immediately perish. You're still not dead, which means that you have options. Pity only those that die instantly, physically, when they get handed terrible news or news that they don't like, which rarely, if ever, actually happens. Patience is a virtue for a reason. Embrace it. And embrace the fact that we can only get 23.5 ounces of shiny metal rocks with our one Bitcoin, of which there are 19,948,607.41 of, and average fees per block are low, 0.02 BTC taken in fees on a per block basis. It's about 35 blocks carrying 64,000 transactions, waiting to clear at high priority rates of 2 Satoshis per VByte. Low priorities are 1. Still zettahash territory, 1.09. We've actually had an increase from yesterday's 1.08 zettahashes per second. It's all the protection for the Bitcoin network that you will need and more. And from Bambi's Firefight, yesterday's episode of BitcoinAnd, I got God's Death with 237 sats says, thank you, sir. No, thank you. Here and Gone with 100 says, Bitcoin under the 200-day moving average. It's on sale. Time to smash. Jason High with 500 says, thanks for the news we can use. You're welcome. Jub with 3,000 sats. Yeah, baby. Have some cheap sats. I remember a time when that would have been $3, but I digress. Bitcoin for President with 500 sats says, I love your show. I look forward to it daily. Thank you. No, thank you. And he wrote that because he listens to the show. Thank you, Bitcoin for President. I certainly appreciate it. And I hope you enjoy this show as well, too, for this Friday. Pies with 121 says, thank you, sir. No, thank you. And that's going to do it for the weather report. Welcome to part 2 of the news that you can use. Bitcoin can win U.S. voters regardless of political lean, according to a survey. Braden Lindria from Cointelegraph starts us off in the second half here. Bitcoin can resonate with U.S. voters even across political divides, according to a new analysis from the BTC Policy Institute released on Thursday, which shows that each party warms to Bitcoin when it's seen as aligning with their core values. Pausing because I want to say one phrase. Schelling point. If I remember and my little neurons can rub together and keep a fire going in my mind and I can remember what the hell's going on, I'll try to say more about that later. But continuing, BTC Policy utilized data from a June 2025 survey conducted by the US-based polling analytics platform Signal, spelled with a CYG, Signal. It's actually, I don't know, it's kind of cool. To model how Democrats, Republicans, and independents respond to specific Bitcoin narratives. Democrats were mostly attracted to Bitcoin's ability to enhance the financial freedom and inclusion for underserved populations, while both Republicans as well as independents liked the stability that Bitcoin mining brings to the energy grid and the right to transact without government interference. Independents were, however, twice as likely to own Bitcoin as Republicans and over 5 times more than Democrats. Bitcoin and cryptocurrencies have lately been seen as a means for financial innovation, having been embraced by the Trump administration so far in 2025, while it saw more cautious treatment under the previous administration. However, it's worth noting that Bitcoin runs purely on math and code and has no affiliation with people, companies, or political parties. BTC policy stated that Bitcoin-friendly policymakers should educate their audiences on how Bitcoin aligns with their core beliefs rather than referring to it as an investment. Quote, advocacy initiatives should prioritize value-based messaging over appeals to personal financial gain. It said Bitcoin's role in financial inclusion, protection from authoritarian control, and sustainable technology or technological innovation could appeal across party lines to reduce polarization and improve bipartisan support for measures such as strategic Bitcoin reserve. Quote, policymakers across the aisle can leverage these insights to advance legislation that appeals to voters' shared values of financial freedom and democracy with low risk of alienating their voter bases. This is actually more key than I think people would be giving this story credit for. I mentioned Schelling point. If you don't know what that is, I'm not going to say look it up. I'm just going to give you a mild primer of it here, and I'm probably going to screw this up. Just bear with me. If you had called a friend and said, hey, I'm going to be in New York City, you live in New York City, we got to meet up and go have a beer. And I'll be there on Thursday, not sure what time yet. Okay, so at least you got the day, right? Thursday. But neither one of you know what time you're going to go. And then the phone gets cut off, right? Something happens. You're mid-flight. And something happens. I don't know. Maybe it was an EMP. Maybe it was an alien invasion. Who gives a shit? But your plane lands at LaGuardia Airport in New York City, and you get out, but you didn't make plans to meet. He knows or she knows that you're going to be there on Thursday, and that's that day. You've landed at LaGuardia on Thursday. Where do you go to meet your friend? You find the Schelling point. And many people would say, if the two of you only knew what day you were going to be in New York City, but you didn't know where to meet, you didn't know where to go, and you had no plans, where do you think the most likely place that you would be able to find this other individual would be, especially if they knew that you were going to be in New York City? And most of them say at the clock at Grand Central Station. That is a Schelling point. That's where two people that don't know each other or don't know much about each other or don't know certain things about each other, that's where they can find common ground. That's another way to put what a Schelling point is a natural common ground for either people that don't know each other or people that don't know certain things about each other. That's where we are with Bitcoin. Bitcoin itself is a Schelling point. It's been said that many, many times by many, many thinkers in the space, but I'm saying it again. In this case, in the political divide, we've got Democrats, independents, and Republicans. And all of them can find some common ground with Bitcoin. We've lost in the political structure in the United States. It is worse. It is the worst divide that I've ever seen in my entire life. And I've been around long enough where I've seen a lot of this shit. And I've never seen it this bad. And it's been bad for 10 years. It was bad 15 years ago. It was getting bad 20 years ago. It's unrecognizable 25 and 30 years ago. You know, especially around 25 years ago when 9/11 happened, and Republicans and independents and Democrats, you couldn't tell them apart. They were all running in the same direction towards Patriot Act, which sucks. It's not patriotic at all, but you get my drift. They had their Schelling point, right? But it's just in 25 years, not only has that unity dissolved, but we've got the biggest rift we've ever seen. This analysis is suggesting that there could be enough common ground to bridge that gap. I don't trust politicians as far as I can throw them. Personally, I think they should all be taken out in the street and tarred and feathered. At least for no other reason than to remind them who they work for. Maybe we'd even let them get cleaned up after parading them around the streets for a couple of days and go back to their jobs and see if they actually change their tune. Not advocating for them to be killed or anything like that. I'm just saying, this is what I was saying yesterday, our apathy just lets these freaks run wild. At one point or another, maybe they should be tarred and feathered as a reminder. You are human. You are vulnerable. You work for us. You stop screwing with us and we won't screw with you. It's pretty fucking simple. But with divides like this in the political spectrum, it's not good for anybody. Not good for anybody. If Bitcoin can serve as a Schelling point, a common meeting ground for people that otherwise would have nothing in common with each other, then bridges can be built and wounds can be healed. We've got to remember what Bitcoin is here for. It's here for several reasons. This is one of them. Meanwhile, over at Emory University, they've doubled their Bitcoin investment, $52 million in the Grayscale ETF. Atlas21.com is telling us about it. Private Emory University, which is located in Georgia, has expanded its exposure to Bitcoin. According to the 13F filing submitted to the SEC November the 13th, there's a lot of 13s there, the university held over 1 million shares of the Grayscale Bitcoin Mini Trust as of September the 30th, representing a value of approximately $52 million at that date, which is much different than today. This marks a substantial increase compared to just under 500,000 shares held at the end of the second quarter. The university's journey with Bitcoin began October 2024, when it first disclosed a stake in the Grayscale Trust, valued at just over $15 million at the time. Meanwhile, its exposure to BlackRock's spot Bitcoin ETF remained unchanged during the third quarter, maintaining a value of around $290,000. The endowment fund also made a new investment in the BlackRock Shares Gold Trust, holding nearly $79 million by the end of the third quarter. Additionally, the fund increased its stake in the exchange Coinbase, now holding almost 4,500 shares, valued at $1.2 million, slightly up from 4,312 shares the previous year. Endowment funds are long-term investment vehicles created to support nonprofit organizations like universities, hospitals, and religious institutions. So, Georgia-based Emory University going for broke over there. It's interesting that Atlas 21 didn't say how much money on paper that they're not worth anymore. They probably, again, not telling bad news is it's not that it's unethical. It's like what I was saying about that other story. You ended the story with a fear sentence. If you really wanted to actually do this right, then this Atlas 21 story should have said how much these investments are worth, but put it in the damn middle of the story and don't end the story with, oh, by the way, Emory University lost their ass and you are too. Be fearful. Be very, very fearful. No, you just stick it in the middle and say, oh, okay, just for journalistic integrity, by the way, with the current downtrend in Bitcoin and the rest of all this shit, yeah, it's not worth that much anymore. It's worth this. But, hey, look, they increased their stuff and then have some commentary on it. I'm just saying they didn't say anything about the fact that it is probably not worth $52 million because that was the number on September the 30th, which was, 15 days ago? I'm just saying. Now I'm going to say this. Bernstein sees 56% upside for Figure as tokenized loan growth fuels massive beat in the third quarter. This is James Hunt writing for The Block. I'm bringing you this as sort of a warning. Like I'm saying we should look at deposit tokens and make sure that we don't, one day wake up and it's like another stablecoin thing where it's freaking huge and it's everywhere and you don't understand it and you're like, what the hell's going on? Yeah, well, lending. All right, let's, and we've been through this game before with BlockFi and all the rest of that crap. All right, so let's keep an eye on what's going on here with Figure Technology Solutions delivering what analysts at research and brokerage firm Bernstein described as a massive beat in the third quarter, driven by accelerating tokenized loan growth. Tokenized loan growth. Tokenized loans, ladies and gentlemen, make sure you don't miss this. Not because you need to invest in it or not because you need to take part of it. You just need to know that it's there. And my gut feeling is that this is not as good of a deal as it's going to be made out to be and could possibly cause problems in the future. So it's better to be aware of the trap. Here it is. The Frank Herbert logic from Dune. The best way of avoiding a trap is knowing of its existence. It's good. It's good advice. But on November the 13th, Figure reported adjusted revenue of about $156 million in the third quarter. That exceeded consensus expectations of around $119 million by 30%. Meanwhile, adjusted EBITDA reached approximately $86 million, which was 60% above consensus estimates of roughly only $54 million. This whole thing, this Figure Technology Solutions, was founded by SoFi co-founder Mark Cagney. Figure has grown into the leading independent non-bank home equity line of credit originator in the U.S., going public on the NASDAQ in September. Holy shit. Oh, God. Why am I kind of puking a little bit? Think 2007, 2008, 2009. Let me just read it again. Figure has grown into the leading independent non-bank home equity line of credit originator. They're making home equity loans. Making home equity loans in this housing market, which we all know is way overblown. And just one thing can happen, just like it did in 2000, at the end of 2007 and getting into 2008. And a whole, I don't like this. I don't like this one bit. Total loan originations rose roughly 34% quarter over quarter to $2.5 billion. That's billion with a B, led by approximately $2.4 billion in home equity lines of credit. God, while HELOC originations typically show strong Q3 seasonality, Figure's consumer loan volumes were up around 70% year over year, compared with roughly 4% growth across the broader HELOC industry. Bernstein analyst led by Gautam Shugani noted in a Friday report. Newer categories, including crypto-backed loans, debt service coverage ratio loans, and small business loans, also contributed around $80 million in volume, reflecting early traction outside the company's core HELOC segment. So they're making different loans than home equity lines of credit. That's what HELOC means. Partner originated and tokenized loans remain the centerpiece of Figure's model, accounting for 76% of total loan volume in Q3, while Figure branded loans contributed the remaining 24%. The Figure Connect marketplace alone continued to expand its share, contributing about 46% of all of its loan activity for the quarter, and that's up from around 42% in the second quarter. Connect volumes rose to roughly $1.1 billion, up 48% quarter over quarter. Figure continues to follow its asset-light model, positioning itself as a blockchain-based platform for loan origination, with tokenized partner channels making a strong contribution to the third quarter profitability, the analysts said. Pausing. Blockchain-based platform for loan origination centered around home equity lines of credit in this housing market. Are you shitting me? I feel bad already for the people I don't know, who I will find out later has any kind of loan with these people. God, take rates on partner branded and intermediated loans increased by around 36 basis points to approximately 4.2% in the third quarter. The analyst also pointed to continued growth in Figure's partner ecosystem members, which expanded from 170 to 246 active partners quarter over quarter. And at the same time, the number of marketplace participants on Connect rose from 27 to 33. However, they noted that despite promising progress across Figure's DeFi stack, it has yet to contribute to revenue materially. Not even getting good money out of it. Bernstein reaffirmed its outperform ratings and a $54 price target on Figure stock, describing the firm as a category-leading tokenization platform for credit. Suit speak. The target implies approximately 56% upside from Thursday's closing price of $34.59 per trading view. FIGR is currently up 4.2% in pre-market trading on Friday. The analyst concluded that structural growth in tokenized loan origination, particularly through Connect, remains central to their long-term thesis for Figure, while acknowledging that macro factors such as aggressive interest rate declines and a private credit cycle slowdown could influence future performance. Oh, it's very rare that I run across something that as I'm reading it, what I'm reading about becomes more and more fragile in my eyes. And this son bitch, I don't know, it's like a glass jaw just waiting to be punched in the face. Last up for the day, judge denies Apple and OpenAI's bid to dismiss Elon Musk's antitrust lawsuit. So, I'll bet they were hoping on that one. Vismaya V from Decrypt is writing, a federal judge denied Apple and OpenAI's motions to dismiss Elon Musk's antitrust lawsuit on Thursday, allowing X Corp and XAI's claim of market monopolization to proceed towards trial. So Elon Musk now has standing. This is essentially what that says. On Thursday, U.S. District Court Judge Matt Pittman rejected both companies' attempts to dismiss the case, ruling that the allegations warrant further examination through summary judgment. Quote, this order should not be construed as a judgment or a prejudgment on the merits of this litigation, the ruling said. The lawsuit, which was filed in August, targets Apple's June 2024 decision to make ChatGPT the exclusive AI assistant integrated into iOS. Quote, this is a procedural step. The real impact now is where the facts will actually be tested, Evan Alex Chandra, partner at Ignos Law Alliance, told Decrypt. The case highlights an unresolved question globally about how default AI integrations on dominant platforms should be treated under antitrust law, with regulators still defining what the AI market even is, Chandra added. X Corp and XAI's complaint seeks billions of dollars in damages, alleging the exclusive arrangement gives ChatGPT access to, quote, hundreds of millions of iPhones, while blocking competitors like XAI's Grok chatbot. Musk may have a damn fine case here, y'all. The lawsuit claims ChatGPT controls at least 80% of the generative AI chatbot market, while Grok holds only a few percent despite superior capabilities. I don't know about that. I don't know if Grok is superior. I have no idea how to test that, and this isn't actually said by anybody. The lawsuit claims. So the lawsuit claims that Grok has superior capabilities. Oh, okay, well, whatever. Musk's firm also accused Apple of manipulating App Store rankings to favor ChatGPT while suppressing competitors. Despite Grok ranking second in Apple's productivity category and X ranking first in news, neither appears in the prominent, quote, must-have apps section where ChatGPT is featured. Ishita Sharma, managing partner at Fathom Legal, told Decrypt the case hinges on evidence of exclusion versus efficiency, whether rivals are truly blocked from Apple's iOS or if it's simply a competitive partnership in a nascent but fast-moving market, end quote. The defense will likely argue that competition remains alive across platforms and browsers, that the arrangement may not be strictly exclusive contractually, and that the integration delivers competitive efficiencies, Sharma added. Decrypt has reached out to Apple and X for comment. A spokesperson for OpenAI told Decrypt that, quote, this case is consistent with Mr. Musk's ongoing pattern of harassment, and we look forward to proving this in court. Yeah, put a tie on that suit speak. Musk co-founded OpenAI in 2015 with Sam Altman, Greg Brockman, and Ilya Sutskever, but stepped down from its board in 2018, according to an announcement that said his departure would eliminate a potential future conflict as Tesla expanded its own AI work. And since then, Musk has accused OpenAI of ditching openness for a closed, profit-driven arm of Microsoft and has sued repeatedly, most notably a lawsuit over abandoning its founding mission and a suit filed 2 months back alleging trade secret theft. Okay. And this article itself was updated to add a comment from OpenAI, so it comes in twice. I don't know, man. Musk may have a good argument because precedent has basically been, was kind of set, a while back with Netscape and the Microsoft. What was the name of the browser? Was it Microsoft Explorer? Was their browser on the internet? And then we're talking in the mid 90s, 97, maybe late 90s, 97, 98. Can't remember exactly where. May have even been, no, it was around there. I think 97, 98, maybe. What happened is that Netscape sued Microsoft because Microsoft was bundling their own web browser inside of the Windows operating system. Now, Microsoft was told that it couldn't do that, but it destroyed Netscape in the process. There's precedent that I think there's enough precedent here that Musk, if he can prove it, has a pretty good case. And it's not that I don't like Musk. I don't think he's the super kick-ass engineer that everybody believes that he is. I mean, I think he's a capable manager. That one I am absolutely certain of. And I mean a capable hiring manager. People who know how to hire people that can get shit done. Because he's not doing all this crap himself. He's not designing the rocket ships and the engines and the cars and the batteries and the electrical systems and the boring machines for his boring company. He's not doing any of that himself. But he sure knows who to hire to get that shit done for him. So from that standpoint, Musk is very much like Bill Gates. He knew how to hire too. And that's why Netscape died. It absolutely perished in the flames of the lawsuit that they brought against Microsoft, even though Microsoft was forced by the court to debundle its web browser from its operating system. So technically Netscape won, but they died in the process. It was a Pyrrhic victory. So I'm not a fan of Elon, but I don't think this is harassment simply because he has a prior lawsuit saying that OpenAI is flubbing its founding mission statement, which it is. OpenAI was supposed to be OpenAI. That's why it was named that. Like all the code was going to be released. All the code was going to be available on public platforms. All the code, it was all going to be open and free, open source software. It was supposed to be FOSS. But they decided not to do that. And when Musk was part of the founding members of OpenAI, that's what he signed up for. I got to give it to him. I may not like him all that much. And even if he's like going, well, I can get a couple of $1 billion over here because they really screwed that up. I don't really care if it's open or if it's free and open source software. Don't give a shit. Don't care. But I got a clear in the courts and I'm going to take it and we're going to come home with a boatload of money. Even if that's true, there's no way to actually prove it because you can't be in his mind. So all I've got is the fact that he's saying, hey, all this shit was supposed to be open. and you went closed source and now it's a for-profit entity, that's not how we structured this. I'm suing your ass for that. And he has standing in that case. He can do that. He was part of the founding members. I don't think that's harassment. Like I said, I can't prove that he just wants money out of the deal. So therefore, I've just got to go with what he's doing, with the stuff that I can see. And what I can see is that he's filing a suit because though OpenAI has been extremely inconsistent with their founding principles. Musk was part of that founding member board. He gets a say in that. I think that it's possible we may be looking at a settlement, because I don't think OpenAI and Apple and everybody else is stupid enough to let this actually go to court. I expect a settlement, and I expect Apple and OpenAI is going to pony up at least a few $1 billion apiece on that settlement. We'll find out. But until then, have a good weekend. I'll see you on the other side. This has been BitcoinAnd, and I'm your host, David Bennett. I hope you enjoyed today's episode and hope to see you again real soon. Have a great day.